Today, I want to talk about the double entry accounting system. In the double entry accounting system, every accounting transaction that we review has at least two sides. We record transactions in something we call accounts. So one of the first questions that comes up is, what exactly is an account? It's kind of tough to visualize accounts, but what they are individual records of increases or decreases. One of the tools that we'll often use in order to illustrate or visualize an account is something called a T account. You can see here the name comes from the shape of the T account. Every T account will have an account name that's placed at the top of the T. In this case, I just put a generic account. And every T account will have two sides, a left side and a right side. Think of T accounts as really just a simplified form of an actual account used for record keeping. T accounts have been used for a number of years to teach accounting, and I really want you to get used to using T accounts in this class. You're going to find that even though it may seem like they take an extra step, you're going to find that as we move on this class, the use of T accounts will become very valuable to you and help you understand more complex transactions as we move along. Now, in order to understand how a T account works, we need to focus on the two sides of the T account. The left side of the T account is what we refer to as the debit side. So when you hear the word debit, I want you to think of the left side of a T account. Sometimes it's difficult to let go of certain connotations you may have already attached to these words. For instance, you may have a debit card, and so you've attached a certain meaning to the word debit already in your brain. You need to really let go of that in this class and replace whatever connotations you have with the word debit with simply left. Make it very simple. Debit simply means the left side of a T account. That's all. On the right side, we refer to that side of the account as the credit side of the account. And again, you'll need to let go of any connotations you have to the word credit and just focus on credit being the right side of the account. To drive home what I'm trying to say is that debits do not necessarily mean good or bad, and they do not necessarily mean increase or decrease. In this class, debit simply and only means the left side of the T account. Likewise, credits are not good or bad, and they do not necessarily mean increase or decrease. The credit side of a T account simply means the right side of the T account. The quicker you let go of your preconceived ideas of what these terms mean and stop trying to attach a meaning to them other than what they are in accounting, the easier this will become for you. Just remember, debit left, credit right. So, how do we use these debits and credits in deciding how they apply in our T account forms? Well, in order to do that, we need to look at certain categories of accounts. So, for instance, we should now be familiar with what assets are. Remember, assets are economic resources that have a future benefit. All assets increase on the debit side and decrease on the credit right side. So, for instance, if we were dealing with the asset cash, cash would increase on the left side of our T account, and likewise cash would decrease on the credit right side of our T account. All assets would follow this same general rule. Liabilities, things we owe, increase on the credit right side, and likewise decrease on the debit left side. Stockholders' equity increases on the credit right side and decreases on the debit left side. If you recall, stockholders' equity has two components to it, common stock and retained earnings. And you can see both of these accounts increase on the credit right side and decrease on the debit left side, following the rules of debits and credits and how they apply to these different categories. Dividends is an outlier. Dividends is something we call a contra equity account, and it works in opposite. Contra meaning opposite, so contra equity would mean that dividends actually increase on the debit left side and therefore decrease on the credit right side. Let's take a look at some of the items that you would typically find on the income statement. Revenues. All revenues increase on the credit right side. Expenses increase on the debit left side. And of course we know if we take revenues minus expenses, we get a calculation of net income or loss. And we also know, just as a form of review here, that net income or loss gets transferred to retained earnings, which increases on the credit right side. Now this is a lot to take in when you're first looking at it. Let me try to see if I can make this a little easier for you. When we refer to these different account category types, the side that the account increases on is something that we refer to as the normal balance of the account. So earlier, remember when we talked about assets, we said that assets increase on the debit left side. That would be the normal balance for an asset. Liabilities increase on the credit right side, and therefore the normal balance for a liability is a credit right side. If you focus simply on each one of these categories and which side they increase on, in other words, what is their normal balance, you really only have to remember about 6 things. Assets, liabilities, capital, dividends, revenues, and expenses. And you simply just have to remember the normal balance or which side each one of these accounts increase on. So of course, if you remember which side they increase on, you naturally know the side they decrease on. Now let me caution you as to one major problem a lot of students who are trying to learn accounting seem to struggle with in this area. It's commonplace to try to rationalize or figure this stuff out. In other words, assets and liabilities seem to be somewhat opposite of each other, so they have opposite normal balances, and revenues and expenses are opposite of each other, so they have opposite normal balances. While that may be true, I'd really caution you against taking that kind of form of thinking and simply focus on just memorizing these normal balances at this point in time. If you do, your life's going to become much easier. You can print out what I refer to as the cheat sheet in your class materials section. You'll see that here to help you along until you can get this memorized. But if you can just really simply memorize these 6 simple normal balance sides, as you're working through the transactions, you'll avoid any future confusion. And again, try not to put any connotations on these debits and credits other than debit means left, credit means right. And then once you know that, you're just remembering the normal balances for each one of these categories. Once you have these normal balances memorized, then it becomes an effort of just looking at transactions and recognizing whether an account is an asset or whether it's a revenue or whether it's an expense. And if you know that, then you would have already memorized what the normal balance is for the accounts, and you'll know how to increase or decrease the account from there.